The only problem I have with this one, Dave, you said you weren't sending your mining stock journal around for free. Is Goldman Sachs a client, or why is Goldman saying to buy silver?
The land of Arcadia.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. For Denver Dave's weekly silver and gold market update. As you can see over there, Dave has been practicing his material and finest jokes all week. He's already chuckling about something, so I won't delay. Dave, welcome on, and how are you doing today, buddy?
Doing okay, all things considered. I've got
You're
a roof over my head. I'm gonna have I'm not worried about where my next meal's coming from. And I don't have people clawing at my front door trying to steal everything I have. So I guess it's a pretty good day right now. Another
well.
day in
I mean, we do have the election coming up in a couple of weeks, so I'm sure someone will be at your
couple of weeks next week.
next week. I'm sure there'll be a politician at your door trying to steal something soon enough. Dave, by the way, you said that.
Dude, when I see politicians when I just see political ads, I have to make sure I know where my wallet is.
Yeah,
Hold
well,
on to it for dear life.
yeah, I mean that is kind of the way it goes. And Dave, I know you're excited. Are you going to go out and vote for your favorite politician next week? And but wait, before you answer that, Dave, can you put your mask on? Let's keep it safe here. Oh, Dave. Goodness. I guess there's a no mask policy in the Kranzler household, so everybody head on over to Golden, Colorado.
I keep them around in case I run out of toilet paper.
Well, there you go. Although, Dave, I know that
I do the same thing with dollars. I have, big stacks of 20s and 10s and singles. They're going to, one of these days, when the store runs out of toilet paper and I can't find any, that's what I'll be using.
Okay, well, this is some lovely imagery to get the show started today. And the only way we could properly follow up toilet paper and Dave's middle finger is by highlighting a bank with a great reputation for railroading its customers. And that's Goldman Sachs, although this time they're saying silver to benefit from the global solar surge. It's time to buy again, Goldman Sachs says. So, Dave, I know we're conspiracy theorists. We've discussed that before, but apparently even Goldman thinks silver stands out as an obvious beneficiary with global infrastructure. Now, the only problem I have with this one, Dave, you said you weren't sending your mining stock journal around for free. Is Goldman Sachs a client, or why is Goldman saying to buy silver?
Well, it just says right there in the headlines, it said to benefit from the solar surge. Now, what's interesting about that is the CEO of General Electric was on Bubble Vision TV today doing an end zone dance about his earnings beat, which contained, egregious accounting manipulation. As a matter of fact, in my short sellers journal 2 years ago, when GE was at 30, I said, this is a short it now and hold it until it goes bankrupt and the stock certs are canceled. And you're going to make $30 for every share that you're short GE eventually. And I mean, it's been below 10 for most of that time. So, but at any rate, he was, patting himself on the back because I guess they've got a big program to try and, exploit natural gas. He said natural gas is going to be explosive because none of these countries are going to be able to afford to pay for solar expansion. So, and it's specifically cited, lack of funding for solar expansion. So GE, which is a client of Goldman Sachs, those two companies should get their stories straight, because here's Goldman Sachs saying, buy silver because of the solar surge. And that's not why you would buy silver, obviously. You buy silver because it's poor man's gold. It's actually the oldest monetary metal. Silver is money. It's real money. So for me, my interest in silver as a wealth preservation asset has nothing to do with solar. Certainly the industrial attributes, the industrial demand attributes of silver make it even, that much more desirable. But I just find it's kind of funny that here's Goldman saying, oh, you buy silver because of solar surge. And then one of their big clients, GE, is saying, oh no, solar's going nowhere because no one's going to be able to afford to fund it. Now, we know that India and China have been massive consumers of silver because they have massive state-sponsored solar expansion programs that have been going on for several years now.
Yeah, I hear what you're saying.
But I will say this, you buy silver because it's extremely undervalued as a monetary metal, relative to gold, and as an investment.
Well, that's why I have you on the show over Goldman, because I've highlighted here. Well, actually, the sentence even before they highlight, I mean, we could do a series of shows on this paragraph alone, because the investment bank initiated a long silver trade earlier this year before closing it out after silver prices surged 50%, briefly reaching its $30 per ounce target. Alrighty. Dave, first of all, I guess this confirms what I learned at Wharton's MBA Business School, that while these investment bank trading desks in the brochure say that they're balancing customer order flow, I mean, I know Goldman is really a bunch of internal hedge funds, but is now Barron's confirming it, where the long silver trade.
I suppose so. I mean, maybe that's their cover story for their long silver trade. I mean, certainly if Goldman is accumulating silver, the street knows it and word spreads. So maybe that's what their cover story is. I don't know. I got to think that Goldman's smarter than that to think that, the reason why you buy silver is to take advantage of the expansion of solar energy installation across the world.
Hold on, we'll get to that one. Although, number two, so basically, according to that first sentence, Goldman went long, just sold right at the $30 mark.
Did it hit 30?
I know it as hitting 29. Although it's funny.
Yeah, maybe the futures ticked at 30 briefly. I don't think the spot price ever hit 30.
I mean, I don't think so. But again, hearing at least this article, whether, again, this is the author's interpretation. I don't know how factual that is, but
consider the source. It's Barron's. I mean, Barron's is essentially, it's a comic book for finance professionals. Anyone who takes Barron's seriously probably has not more than one brain cell in their head.
Well, there we go.
It used to be a serious publication, but it's not anymore. I mean, it's a Wall Street propaganda rag.
Maybe you could license the Mining Stock Journal, and they could, have their customers access that for a nice. You charge them an ounce of silver.
It's cheaper than a yearly subscription to Barron's.
Well, I hear you. And I guess what?
And it's probably more value added.
Well, there you go. At least what strikes me or comes to mind when I read this sentence, at least suggesting that, they bought silver, sold exactly at the top, reminds me a little bit of, I believe it was 2 years ago when Chris Giancarlo, former CFTC guy, he actually said one of the untold successes of the Trump administration was that they popped the Bitcoin bubble. And he cited, Steve Mnuchin, Donald Trump. I'll pull this one up here. A lot of Goldman Sachs guys. And I thought, hey, that's interesting, because if they're saying that popped the bubble, I mean, I guess on some level now, the government is deciding which markets are bubbles or not. Dave, actually, I'm going to pull this one up. You can put your mask on. I know you're not a big crypto fan, so I don't want to get you throwing stuff over there, but we've never talked about this. This was Trump administration popped the Bitcoin bubble. Here we go. One of the untold stories of the past few years is that the CFTC, the Treasury, the SEC, and Gary Cohn, so I mean, half that list is Goldman Sachs. And then they said, believe that the launch of Bitcoin futures would have the impact of popping the Bitcoin bubble, and it worked. And of course, question number one is that, Dave, where do you think that these guys might have learned that launching a futures contract could lower the price of an asset?
You know, that's actually really interesting there, because that's essentially it's essentially the CFTC admitting that futures can be used to manipulate the price of a commodity. I'm not saying gold and silver are commodities. They've been labeled as commodities as part of the program that was implemented in the early 70s to kind of wash the public's mind of the idea that gold and silver are money when Nixon closed the gold window. But that right there basically, in so many words, is basically saying that the CFTC is admitting that futures can be used to control or manipulate the price of the underlying commodity.
Exactly. In fact, it reminds me of in 2013 when former President Obama, as one of his the only two plans I've ever heard in my lifetime for deficit reduction were A, minting $1 trillion platinum coin, and B, Obama also suggested changing the CPI formula to reduce liability to senior citizens. So let's rig the data to screw them. But Dave, there's more in this one, because John Carlo elaborated further, saying Bitcoin's price run up in December 2017 was the first major bubble following the 2008 crisis. And that's why the Trump administration acted in concert to address it in a pro-markets, where do they come up with these pro-markets, intervening market? Although, Dave, I guess that means that John Carlo did not see President Trump's political campaign, where he talked about the stock market being a big, fat, ugly bubble fueled by the Federal Reserve to keep the Democrats in power. He doesn't think that apparently 0.6% yielding treasuries with a 2% inflation mandate, that I guess after inflation targeting is higher than that. So he doesn't see bubbles anywhere else, just Bitcoin. Are we gonna get the announcement tomorrow that gold is a bubble now, so they got to go pop that?
Every time gold starts moving higher, people come out and say it's a bubble.
John Carlos says, we saw a bubble building and we thought the best way to address it was to allow the market to interact with it. Well,
the market was, you know, the market didn't need futures to be a market. There were buyers and sellers of Bitcoin ever since Bitcoin rolled out. I mean, they didn't need to layer in futures for it. I mean, I don't even know what the purpose of a Bitcoin future would be other than to manipulate the market. It's just like,
well, Dave,
I can understand why, you know, in one sense there would be gold futures or silver futures, because I mean the idea behind the futures markets historically, I think futures started trading in like the 1700s for agricultural commodities. It was a financing tool for farmers. They could sell their crop, you know, ahead of time to finance planting it and growing it and harvesting it, and they would deliver the amount of the commodity that they owed based on the futures contracts that they sold, and they'd keep the rest and sell that for profit. Now, the gold and silver futures market is nothing like that, because if you're a farmer and you're selling a future, you can't sell more futures than the amount of the commodity that you're going to grow, right? and produce. You can't deliver something you don't have, right? But if you look at gold and silver futures, obviously there's many multiples of gold and silver potential contract obligations relative to the deliverable amount of gold and silver that's in COMEX vaults. And I'm talking the total amount of gold and silver, not just the gold and silver that's been made available for delivery or designated as available for delivery. So, I mean, clearly gold and silver futures are are designed. Well, silver futures, I think, traded since the early 60s. Gold futures didn't happen until 1974, after we went off the gold standard, after the price of gold started going crazy. And, it's well known from letters bandied about between Henry Kissinger and his various advisors that they were looking for a way to control the price of gold and a way to control the amount of institutional money that flowed into physical gold, because they knew they wouldn't be able to control the price otherwise. They can, with futures, they can, to a degree, control the price more or less to a degree. Sometimes they have less control over it, like we saw this summer, and sometimes they have more control over it, like we've seen over these past couple months. But the point here is that Bitcoin futures, and I'm not defending Bitcoin. I'm kind of, I'm agnostic on Bitcoin. For the most
That's
part.
not even close to being true. You hate Bitcoin. You can say it.
I didn't say I hate it. I just say that it's not what it's purported to be. It's not something that's limited in the supply that has no counterparty risk, right? Physical gold, you own physical gold, you don't have counterparty risk, all right? You have a dollar in your hand, there's counterparty risk, because the dollar is technically a note. It's a debt instrument issued by the Fed, okay? So there's counterparty risk there. And with dollars, your counterparty risk is the Federal Reserve and the U.S. Treasury. You have gold unencumbered, there's no counterparty risk. You have gold futures, there's all kinds of risks embedded in that thing. Counterparty risk, delivery risk, all kinds of risks involved with futures. So, but my point here is that the gold and silver futures market resembles nothing like the original agricultural futures market that was established to help farmers finance their crops.
Well, Dave,
and you could say, okay, well, mining companies need to hedge their production. Well, that's great, except, you're looking at, at some points in time, the amount of futures outstanding is more than a year's worth of production. And not all mining companies hedge their production. Very few do, actually, unless they're required by the bank.
well, Dave, I hear you. And actually, that one last thing, and then we got a few quick stories before we wrap up today. But along the lines of what you were saying, you see down here some new market theory. Chris Giancarlo, first, the CFTC, it's like there's a lot of things that happen that they seem oblivious to, yet, there's got Warren Buffett and the creator of the new efficient market hypothesis over here explaining, without a short, a market has no pessimist. If you do believe it's a ridiculous price, but you don't own it, there's no way to express that view. If you don't have that derivative, then all you've got are believers, and it's a believer's market. Actually,
that's a bunch of bullshit right there.
What about just people buy and sell things that exist? Because
why can't you short a Bitcoin? There's Bitcoin ETF. There's a Bitcoin ETF. You can just short the Bitcoin ETF. If you think Bitcoin's overvalued, why can't you just borrow Bitcoins from someone and short them?
Well, that's
you
what I
don't
was
need a
getting.
futures market to short Bitcoin.
That's what I was getting at, because it's like, even I guess Giancarlo taking it upon himself to decide that, I think people should be able to. He basically wants that scene that Salma Hayek has in The Big Short, where it's like, all right, we're going to make a side market on this. Then these guys are going to bet 20 million on their side market. And he's basically advocating a derivative chain. What is not saying, though, is that it's like, if you want to short a stock, or I don't know, this probably has changed, but at least you used to have to locate it. You had to have a borrow, so you can't have, 100 units of something out there and 400 shorts. But fortunately, the CFTC handled it strictly on procedural grounds. But at the leadership level, I communicated with Mnuchin and Gary Cohn. I wonder if Goldman Sachs knew that bubble was about to pop before it did.
Of course they did.
But Dave,
Jesus Christ, this guy went to Skidmore? Are you kidding? That's like a safety school. When you think you can only get into third-tier private schools, but you're not sure, you apply to Skidmore as your safety school. Oh my God.
All right, I think we've just lost anybody, any Skidmore audience.
Probably no Skidmore
Our audience
people in this audience. Small school, and they're probably not into precious metals. I was just trying to look and see what his background was, because usually these CFTC guys, especially the ones that make it, or become the chairman, are like ex-Wall Streeters, like Gary Cohn.
Well, Dave, while you're checking out his background, I got a couple last quick ones for you tonight, because it turns out Goldman isn't the only one who. Actually, we didn't even finish how Goldman, or I guess you said it, how Goldman, the main reason they think silver is going to rise is because of solar demand, nothing about the Fed. Seems a little unusual to me, but here's Citigroup, or I guess they're just Citi now, states silver prices to rally over $40 in the next 12 months on sustained investor demand and recover in industrial consumption. So, I know
Citicorp said that?
it's right there, buddy.
Wow. That's interesting. I missed that. I don't know how I missed
Silver
that.
shines, says Citi, tipping a 60% price rise for starters. Speaking of the Hunt brothers, Dave, yesterday I went to pump some iron with Silver Bill Murphy here in Dallas, and actually met someone from the Hunt brothers family. She was working out at the gym. And
Doesn't surprise me that Bill knew her.
yeah, and hopefully now, because I would say one of the few, there's one chapter I wanted to do in the Big Silver Short, which was get someone from the Hunt family. I've thought it could be an interesting topic for another future book. So apparently we have an in there, thanks to Silver Bill. So anyway, you see Citi calling for higher silver, and perhaps we'll. Oh, no, we can't wrap up yet. These are just so good. I'll read a couple of them. You can make any comments, and then we'll stop. But stocks slide on coronavirus uptick, fading stimulus hopes. Dave, is there anything more certain than that we're going to be getting more stimulus, likely sooner than later?
The Fed's already telegraphed that. I mean, nothing could be more obvious.
And then just a couple stories that I find weird. There's Facebook getting ready to censor tweets. And lastly, I thought this was interesting. Apparently, Iran's been spoofing too. It's not just limited to gold and silver banks. So anyway, Dave, that is the news.
Are they spoofing emails to manipulate emails?
I mean, maybe in a future episode, my father being from Egypt, so not claiming, and I've dated a Persian woman a couple years ago, so I have like to think I have some small understanding. The thing with Iran seems weird to me, because what I've researched is that prior to the CIA overthrowing Mohammad Mossadegh in 1951, Iranians actually loved Americans, and still not sure how they're the bad guy, but we'll leave that aside and wrap up with the good news that you don't even have to listen to Goldman or Citi, because here at the Mining Stock Journal, Denver Dave, author of the weekly silver and gold market update, lays it out every other week. Dave, do you have any teasers? Did you find the new greatest silver stock that you're not going to tell me about today, but people have to wait for the journal to get?
No, I'm still finishing up the next issue that comes out tomorrow. I'm probably going to discuss some of the stocks that have been getting beaten up over the last couple months and got really beat up today. Today, recording this Wednesday evening, by the way. So I don't know what's going to happen on Thursday. But probably just discuss. I am issuing an opinion on Defiant Silver, but probably just discuss some of the stocks that I would put on my list when you think the market is done doing what it's doing right now and is ready to continue moving upward and higher. Some of the stocks that I consider to be particularly good values right now.
Well, I sure appreciate that. You do a good job of laying it out. And
Thanks, I appreciate that.
I will be looking forward to the next one. It usually makes me want to email arcadia@milesfranklin.com, where our sponsor, Miles Franklin, can help you with all of your gold and silver needs. Platinum and palladium, too. We had a lot of platinum coverage on the show this week, Dave, which I know isn't your favorite, but...
Well, it's not that it's not my favorite. It's not a monetary metal, so that's why I'm not interested in it. I mean, it could be a great investment as a base commodity industrial metal, for sure.
Well, Dave, after you're done watching this week's Denver Dave Silver and Gold Market Update, you don't even have to go anywhere, because for folks who want to know a little bit more about some of the interesting companies, well, here is Valor Metals that is out exploring platinum and palladium, and you can find out more about them now.